Rick Rule, Doug Casey, Marin Katusa, Sprott Asset Management, Li Ka-shing, the richest man in mainland China, worth roughly $30 billion, and many top-notch and accomplished fund managers are all backing this man's every move. Founder of two market-leading companies, Amir Adnani is with us today to share the details of the game-changing transaction his company just undertook. After a sustained 6-year uranium bear market, Amir's company is a first mover and is poised for incredible growth. If you're a uranium bull and if you believe in U.S. energy independence, here's the full report. Welcome to the Millionaires Mining Executives Show. Look, I have a real treat for you today. One of our closest contact, the president and CEO of Uranium Energy Corp and the chairman and founder of Gold Mining Inc., formerly Brazil Resources, is with us today. For the span of time that I've known Amir Adnani, I gotta say he's one of the most relentless CEOs and business builders in the mining space, perhaps even in any small cap industry that you would take him. If you migrate him to any company in the world, he will probably add tremendous value. This guy, I was on the phone with him so early in the morning today, and he was fired up. It was midday, and now we're going to record this interview so you can get the feel of what's going on with Uranium Energy Corp. We just announced a huge deal. Amir, how are you today?
As you said, I'm excited today, and I'm pleased to be able to connect with you and speak to you and address your audience about the exciting things going on.
Look, we're doing this as the market just closed. UEC just closed at $1.35, up 12% today on major volume. Obviously, the market is reacting to a major deal, obviously the largest uranium deal of 2017. And you know, I went over the news release. We've talked before the show. Could you wrap people's heads around what today means for this company?
Well, maybe before we talk about what today's news means, we need just a little bit of context, which goes to explain why today's news is so important. And the context is what has really happened over the last 4 months in some really key changes in the uranium market. The uranium price about four to 5 months ago hit rock bottom, got to about $18 per pound. That was about a 12-year low. And you know what they say, when you hit rock bottom, there's only one way to go, and that's up. And so the uranium price has been climbing since then. Due to a number of factors, world's biggest uranium producers have come out and announced production cuts. That's taken supply off the market. Uranium price is up 35% year to date. That's a positive development. The trend is heading in the right direction. Second, with the new administration in, the focus has changed in terms of the importance of nuclear power to generate clean, carbon-free electricity in the U.S. and to make sure there's uranium available through domestic sources of production. This is the key thing, Lior. When I got in this business 12 years ago, I was shocked that the U.S. was importing over 90% of its uranium requirements from foreign sources. Today, that's more than, it's about closer to 95% of U.S. uranium is being imported from Russia, Kazakhstan, and other places. And the new administration really wants to see that change. They want to see more uranium mined domestically because that's an energy security, national security issue. And to do that, you need to see the uranium sector come around. So back to today's news. Why is today's news important? Because there aren't too many uranium projects out there in mining-friendly regions like Texas or Wyoming, where you have a fully permitted project that's construction ready. In fact, it is so rare that what we announced today, our acquisition of a project called Reno Creek in the state of Wyoming, is the only project that was really privately held, not inside a public company in any meaningful way. 2% of this project was owned by a public company, but 98% of it was owned by a major global mining-focused private equity group. And we are announcing today that we're acquiring this project. So in the context of growing importance and need for domestic sources of uranium, the fact that uranium prices are on the right trend, it's the upward trend, And the fact that the style of mining that we can use here is the ISR, or in situ recovery method, which is lower risk, lower cost compared to open pit, strip mining, or underground mining. Those are all the reasons why this acquisition was so well received in the market, and why we're I think excited to really talk about it. And this acquisition has really been years in the working for us, because it's an asset and a situation we were very much aware of. But these deals are sometimes, you got to have a lot of patience and stamina to find the right deal and bring it to a result and fruition.
So to kind of understand this, this was the only privately held, fully permitted uranium project on U.S. soil?
That was not already inside a public company. But even if you look at the public companies, ourselves, UEC, with what we've done in Texas, we're probably one of the only companies, even public, that have projects that are production ready, construction ready, and can basically be brought into production as the uranium price continues to get better. The bottom line is that we've had a 6-year bear market in the uranium sector. When you have a prolonged bear market like that, you end up with less capital being invested in new exploration development, less capital being invested in permitting, and as a result, there's a real scarcity of projects that are construction ready, that are fully permitted. And so, yes, that's the question. That's why it is such a rare opportunity on U.S. soil.
So basically, no other company can copy or even come close to getting a fully permitted project on U.S. soil in the near future, because there aren't any. So this is a real, true competitive advantage. And the way I look at it as an investor and a former fund manager, I'm looking at other funds, fund managers that are going to get calls from clients and saying, okay, why weren't we part of what's going on? Why were we invested in peer companies that have no way of doing the same thing that UEC just did, and that's buying a fully permitted project? Just so I can understand this, because the news release says this very clearly. The private equity firm put $60 million into this project in the last 6 years getting it permitted, and they only took $20 million worth of UEC shares in a strictly shares deal with you guys. Is that correct?
That's correct, and it's a big endorsement really for our company and what we're doing. And you saw also in the press release that one of the partners from the private equity group that is selling us the project, and as a result becoming a 9% shareholder of our company, really discussed the fact that in their mind, our company, our team, and our assets are the best and the most ideal vehicle for them to consolidate with, become a shareholder in, and that we can truly enhance the value of this Reno Creek project, given our capabilities and given that we are consolidating and are the leading consolidator of these types of low-cost uranium projects in the U.S.
Sure. Look, from an investor point of view, what they just did was take a 66% haircut on their initial investment and took a calculated risk that owning UEC shares will get them their principal back. So they're obviously banking on a 300% gain here on UEC shares just to get back to to balance what they initially put 6 years ago. So obviously they're looking for much more than that. And yeah, that obviously that to me means that this private equity firm took 3-4 years, like you said, shopping around the market, and then finally locking arms with UEC. I want to kind of talk about another factor that is driving this. What I feel would be the kind of the bottom for the price of UEC this year. In 3 days, so on May 12th, the Russell 3000, which is part of people's 401ks, it's a massive index, is going to probably include UEC if nothing amazing happens here in the next 3 days, and this is going to alter the way this company trades. Traders are going to want to be part of this. Fund managers will have to be part of this, this is really big news for the company, right?
Well, we'll see what happens with it. Yeah, as you point out, the annual rebalancing of the Russell Index, it is a major event that has definitely drives a lot of the small cap companies, especially that might be added to the index in a meaningful way. And so it looks like, based on some of the projections that we've seen from banks that specialize in this rebalancing, that UEC has a good shot at potentially being added. So look, this is not something that, in my mind, has anything to do with uranium. It's a function of the fact that we're a public company and are getting big enough now with the right execution of our business plan. We've managed to attract enough long-term fundamental investors, like some of the biggest mining funds in the world. I mean, besides the fact that this private equity group now becomes a major equity holder, you have JP Morgan's basically global mining fund that has led our last two financings. They're a major shareholder. BlackRock, Fidelity, Asia's richest individual, Li Ka-shing, one of the best asset managers focused in mining in Canada, the Sprott Asset Management Group. These are all the fundamental investors the company has as backers. So when you get big enough, in my opinion, as a business with fundamental long-term investors, and then you can start to attract some of these index funds or get big enough to be added to an index as massive as the Russell, that creates a very interesting 1-2 punch. And look, let's see what happens. But as you said, we'll know by May 12th, and it looks at this point that we have a good shot to potentially be added to the Russell Index.
Let's talk about this. These fundamental investors that are in the company. You just recently had a financing round at $1.50. So today's opportunity is truly unique because the open market offers an opportunity to get in at a cheaper price than the accredited investors. These are millionaire investors who probably have teams of people vetting the companies from every angle. And right now, with this transaction, the company is still cheaper than before. It's quite amazing. But what I really want to focus on, Amir, is the fact that this company, to me, presents the very complex role of being a CEO. Because on one end, right now, you have two fully permitted projects that with one order, you can commence production, and we're talking about a profitable company that makes money, that can grow that can grow organically. And on the flip side, right now you're conserving capital, you're working very hard to make this efficient, but the idea is simple. Once the market turns around, once uranium prices are economic enough, you've got two major projects that can readily start. Is that a fair picture of the way UEC is run right now?
When you look at the uranium sector in the United States, the two regions that you want to really be in that are active geologically and with history for this low-cost ISR method of mining would be Texas and Wyoming. And in particular, South Texas, the South Texas Uranium Belt, and the Powder River Basin of Wyoming. We've spent the last 11 years as a public company focused in very meticulously putting together the land, the leases, the people, the data, the drilling, the permitting, to have a solid base in South Texas. We're the leading company when it comes to South Texas uranium infrastructure. We have our Hobson plant. We have two permitted projects down there, our Palangana Goliath project, and now our Burke Hollow discovery. And over the last 7 to 10 years, the private equity group that owned Reno Creek, the project we bought today or announced that we're buying today in Wyoming, had done the same thing. Over the last 7 to 10 years, they had invested, as you pointed out, $60 million in the ground. Prior to that, this project has a very long history. Even before they arrived at the scene and spent their $60 million, there was 15 to 20 years prior to that of work done by other energy companies in developing this Reno Creek project. So we, in essence, have now gotten ourselves two strongholds, two areas, and the two most important regions in the United States for low-cost ISR uranium development. The projects are fully permitted, and it's a wonderful position to be in. We've definitely leapfrogged in terms of time, a substantial amount of time and money that this transaction represents, that this project and the Powder River Basin of Wyoming brings into the company, combined with our Texas business. I should say that, in addition to Texas and Wyoming, we have an incredible pipeline of projects that could be future sources of exploration in Colorado and Arizona, and even further upside in a large project that we have in South America and Paraguay. But to some extent, we can talk about the value of this company all day long, just with Texas and Wyoming now. And some of the extra pipeline and projects that we have could be, again, great optionality for a higher uranium price. So I think it's a very asset-rich portfolio. And that's an exciting position to be in when you're in the resource business. When you're in the resource business, you're as good as the portfolio and the quality of the projects that you have and the depth of these projects and resources. And we are definitely in a position where the portfolio is large, diverse, and most importantly, construction ready and production ready with what we have in Wyoming and the production readiness that we have in South Texas. Now,
just to get this straight, a company that wants to fully permit a project right now, how long does it take to get this done?
Permitting is the long lead item in the U.S. It ain't easy. It was not easy with the previous administration, and even with this administration, who's going to be more business friendly and mining friendly, it's not going to be a walk through the park. So uranium projects are very license intensive. You're looking at anywhere from 3 to 5 years to permit a uranium project from scratch, and that's after you've defined a resource and you've done all those things that have to happen prior to deciding that you're going to start a permitting process. And in certain states, they could even take longer because not all the states move at the same pace. So, ultimately, there's the time factor with permitting, but that only applies after you've done all the exploration and the drilling to arrive at a point that there's something worth permitting.
I want to ask you lastly about UEC. Let's take a scenario here where uranium prices do what they do cyclically. The price goes up, the company starts to produce uranium with their mines. And by the way, I've seen the Hobson mine in Texas, and it looks like a shopping mall. It's so clean. It doesn't even look like a mine. It's brilliantly designed and constructed. Talk to me about and explain to listeners what the company is once it's operational, once it's producing. What can we expect from this kind of a company? What are you going to do with the treasury? Let's take a 3 to 5 year outlook into the future. Where's the vision for the company?
Well, to your point about visually what Hobson and our mine Palangana look like, I would encourage anyone listening who's interested in this to take a look at the video that we have of the ISR process on our website at uraniumenergy.com, where it walks through this process, this technology. And I can't emphasize this enough. We are very much focused as a company on technology and on information. A very extensive amount of historic drilling that has been done on our projects. We want to leverage this work and this low-cost ISR technology to keep our costs down, to keep our risk profile down. Mining, to some extent, could sometimes be a very capital-intensive business, but by using this ISR technology, we are definitely on the lower end of the cost curve and on the lower end of the capital intensity curve. Now, with all of that said, when you look at our business in South Texas, our Palangana mine was built, it was permitted, in fact, we operated. So you have the proof of concept. You can see that we operated, but when we saw the uranium price drop, we didn't want to deplete and waste our resource into a low uranium price environment. So we put that production on hold. We reduced our expenses substantially and are really maintaining our resources and the various uranium projects so that when the uranium price comes around, we could be back into production in a very short time span. We're talking about months as opposed to years, which is what's going to take large conventional mining projects to come into production. They're talking years, we're going to be talking months. And that's the big advantage of ISR. And that's why we have focused so much in assembling a technical team and assets and know-how and permits focused on this type of operation and mining. Again, you can learn more about it on our website. And that's the vision that we have, that we may not be able to control the timing of when the uranium price is going to fully recover. We know it's a when, not an if, but we know we can control what kind of cost profile we have. And if we have a low cost profile, then we'll have a viable business way before any of the large capital intensive conventional projects become economic. There are so many reports out there, Lior, that say large open pit run the ground mines will need $75 uranium price as incentive price to be economic. The current price is $22 per pound. So the uranium price really has to move quite meaningfully before those big projects become viable. We were mining uranium at our Palangana mine and selling it on average when uranium price was at $45 per pound, almost $30 below where large-scale projects become even economic enough to be built. And
that's a really wide margin.
It's a wide margin, and that's why I come back to today's announcement. Again, it's not the fact that it's a fully permitted project. It's not just the fact that it's fully permitted and it's construction ready, but that the geology is amenable to this low-cost ISR method. And so we expect to have the same type of low costs that we've seen with our Texas projects, other Wyoming projects, and that's what has me so excited. And so that, and the size of the resource, to have over 20 million pounds of uranium in the measured and indicated category, which means there's a lot of work has been done. It's a high confidence category. It more than doubles our existing total resources that are ISR amenable in Texas. You're doubling, so you're increasing your total resources in the measured and indicated category by 100%, but the price you're paying is only a 9% dilution. And that's also quite compelling math to keep in mind.
Sure, and just for people listening, because so many people understand base metals and precious metals mining, they do not understand, or it's important for you to understand, that the uranium sector is basically divided into two: conventional mining and ISR mining. ISR mining is completely different than conventional mining. It's far superior, and that's why many companies try to find ISR type deposits, because it's easy to manage them. They're far better at reopening them and closing them without hassles and funds that are going to be exploited to that situation. So this is not even a regular uranium company. It's very important to understand the ISR aspect of this. And I love the video that you have on the website, because it explains it to any 5-year-old. And that's exactly what people like me need: visuals and to understand it. I want to just lastly ask you about the company that you founded. One of the ultimate gold optionality plays, gold mining, formerly Brazil Resources. You've also aggressively built the resource base there. You've just announced another acquisition that you're doing there. And what I really truly love about this company right now is that it trades way below its last financing, which was done just recently. So kind of a short recap of what's going on with Gold Mining Inc., because that is on a lot of people's radars.
Well, as you pointed out, we had a very successful financing, successful in the sense that, again, it was 3 or 4 times oversubscribed. And at the time, late last year, obviously in a different environment for the gold price and sentiment, we completed that at $2.50 a share. And to be frank, that was completed really with a base of shareholders, including insiders, that are long-term and not so focused on the short-term volatilities, but longer-term, believing in the vision and the business strategy that we have in acquiring gold resources in the ground and building a very large portfolio for both near-term production, but also optionality to a higher gold price. So we did that financing at $2.50 a share. Stock has pulled back, just like all gold stocks that have had a difficult period the last few months. I think we closed today at $1.65. So very attractive discount to that financing. But that financing means that the company today has almost $20 million of cash, no debt, and enough basically cash on hand to cover our burn rate to maintain our portfolio and advance our projects for 3 to 4 years to come, which in this business, in the junior resource business, it's fantastic to have that kind of runway ahead of you and to have that kind of war chest. And the second thing is that our whole strategy thrives on the idea of being able to acquire projects when there's basically weakness in the market. The gold market has been weak year to date. That means it's more difficult for junior companies to raise capital, and capital is not available to smaller, undercapitalized companies. We've managed to successfully use these down cycles in the gold market over the last 7 years to make a number of acquisitions such that today we have over 10 million ounces of gold resources in the measured and indicated category, 9 million ounces of gold inferred. And that's a very large resource base. That puts us in the 1% club, the 1% of gold companies that have over 15 million ounces of gold in the ground. And the pullback in the gold price really allows us, again, to be opportunistic, make more acquisitions, like a deal that we announced just last month in Colombia, a company called Belhaven. And overall, when you look at what that company's market cap was back in 2012, about $100 million. We're buying it today for $13.5 million in stock. You can see that the whole kind of terminology of buying for cents on the dollar, that's what we're doing with these acquisitions. And Leo, when you look at our performance as a company since we've been public, from 2011 to now, you actually see that this strategy works. During this period, our shares are up about 150%. We've outperformed the TSX Venture. We've outperformed the GDXJ. We've outperformed even the S&P 500. I think this strategy of buying when the market is down, when you're at the bottom of the gold market, the bottom of the cycle, it minimizes dilution. And when you minimize dilution, you can do accretive acquisitions where value per share increases. And when you have a 6-year track record as a public company that you can put out there and say, look, this strategy of ours works, this acquisition strategy works, or at least our version of it has worked, because now we have the track record to demonstrate that. And we have the balance sheet and the financial strength to keep doing what we've done so well for 6 years and what has worked so well for our investors. And I think that's why we've attracted the Rick Rules, the Doug Casey's, the Marion Katusas, London's biggest gold fund, Ruffer Gold Fund. You see some really big names that are gold focused and have people that have invested in the gold market their entire professional careers, have taken very large positions and stakes in our company. And again, I think that's a validation of our strategy and 6 years of execution track record and a very large resource base that we've accumulated that 99% of gold companies that are pre-production don't have.
Sure, and subscribers of Wealth Research Group know that I've disclosed that Brazil Resources Gold Mining Inc. today is my largest gold position, and I'll just share my opinion, the way I feel about the company that has 24.4 million ounces of gold equivalent. At 2011, gold seniors were buying gold in the ground for $100 per ounce. That gives value to Gold Mining Inc. of $2.44 billion asset base. And if you just if you believe like I do that gold will see a price of about $2,000 per ounce, that gives that gives Gold Mining a share price of about $17.7. And right now the US ticker trades at about 1/10 of that. So I'm in it because I want it to be a 10-bagger for me, and that's the way that people should consider it as a long-term play. That when the market becomes far better, all the hard work, all the commercial sense, all the connections, everything that you've done in the last 6-7 years will become a powerhouse of a company. Amir, I'd like to really thank you for taking the time to be with us today.
It was my pleasure, and look forward to connecting with you again in the near future as we have more updates and developments. Thank you.